and natural gas moved in opposite directions this week. Oil posting gains on the back of sanctions on Iran and a plan from OPEC Plus members to cut output. Meanwhile, nat gas posted its second straight weekly loss due to a surprise storage build. So joining us now is Bill Perkins from Skylar Capital Management. Bill, it's great to have you on. You say nat gas is at an inflection point. Why? What do you mean?
Well, last year we had the producers curtailing production because of low prices, and they're preaching capital discipline and that they're going to need higher prices to invest in natural gas. But they are turning on wells that they've turned off, so we have higher supply. But what's been going on in the Gulf Coast is we've been exporting a lot more LNG, particularly around the Henry Hub, about 3.8 BCF a day and rising. Venture Global came out and said that they found efficiency gains of 40%. And so there's kind of this tug of war on whether or not Henry Hub prices are more related to the international market than they are to domestic pricing.
That's certainly a shift. I'm curious what you think energy policy is going to mean for this market and for the energy complex writ large. Because on the one hand, and we saw it with President Trump meeting with oil and gas executives at the White House this week, the whole drill, baby, drill ethos. On the other, you've got all the trade and tariff dynamics, and you also have geopolitical cross currents, including a possible ceasefire in Ukraine and Russian energy products coming back on the market.
Yeah, it's a mess to try and untangle. I think in the longer term, we can see rising production as they work through the regulations and the permitting processes that slow down development. I think that's a longer term solution, not an immediate solution. I think in the immediate term, we have export authorizations for LNG. Now, it takes a while to build an existing LNG plant, or I'm sorry, a new LNG plant, but to debottleneck one and to get more LNG out of this country, that can happen rather quickly. And so I think the permissive attitude towards energy infrastructure is slightly bullish in the short term and bearish in the long term.
Bill, what's the likely impact of a global trade war on energy? Does it lower demand?
Yeah, that's definitely the bearish. You're seeing that in crude. Crude gets spooked. Anytime we're talking tariffs, trade wars, et cetera, that generally isn't good for global GDP, which isn't good for energy use. I think global GDP and energy use are synonymous. And so you can see pressure from the macro strats, exiting energy or exiting anything where we're looking at a recession or kind of a slowdown in the global economy. That is a spooky bearish fact out there.
So if that's the expectation, what's the surprise that ruins that trade? What are the factors that could cause things to go the other way?
Well, I mean, if you look over to Europe, the prices are in the teens, right? They're $13, $15, right? And you look over at Henry Hub, we're talking $4. And so that arb is pretty large. And so as these export facilities ramp up, do domestic prices in the Northeast or Chicago matter? Is there even enough infrastructure to get the gas from where the gas is produced to where it's going? And so that's kind of the tug of war. If you look at your total U.S. balances, they look fine. But if you look in the South Central or particularly Eastern Louisiana or around the hub, things look extremely tight. And there's a debate on whether it's too tight or short when the cooling season starts. We're going to find out very soon whether or not that's true. If it is too tight, there could be a violent move upward. If it's not and it's loose, it could be under pressure, given where we are headed in stocks.
I realize this is a longer-term dynamic. You just touched on the fact that it is. But are we going to see more infrastructure built out for some of these? I think about Marcellus Shale and how landlocked some of that gas is when you're here or where I live in New York State, and utility bills continue to move higher despite the fact that it's basically in your backyard. Do we start to see more of this infrastructure build out in general domestically?
Yeah, definitely. We're going to see more build out. Where it depends on the state. I think New York State is very anti-growth, very anti-development, particularly in the Northeast. So it's very hard to get pipeline projects. There's a ban on drilling in the Marcellus. Marcellus we're not even drilling in the true Marcellus. That's the upstate New York part. But in Texas, moving the Permian gas across states into Louisiana, over time, we're going to see a lot more energy infrastructure built in certain areas that are a little bit more let's say, friendly to energy development. And in areas where the states are particularly harsh on energy development, it's going to be a longer road.